to know ya. I wanna go far to the coast, yeah. I wanna drive fast to the ocean. I wanna know all of you. Growing old like a ghost, yeah. I wanna have kids of my own, yeah. Live a life till it's over. But until we do, it's sleeping sooner. Yeah, I'm feeling a little crazy. Sat at home being lazy. Wanna travel till I'm 80, flying with you. Wanna take on the world and do something. Would you by my side like it's nothing? Wanna buy you things that you wanted. Wanna find you drop top without a choice, yeah. Hair blow round to the window, singing stupid noise with you. I just wanna get to know ya. I wanna go far to the coast, yeah. I wanna dive fast to the ocean. I wanna know all of you. Growing old like a ghost, yeah. I wanna have kids of my own, yeah. And live a life till it's over. But until we do, it's sleeping too long. It's sleeping too long. It's sleeping too long. It's sleeping too long.
Winter's here, the snow is falling on our car as we drive for miles to that little town called home. Tinsel hangs from every corner of the house, and Christmas lights shine bright through the cold evening fog. And I hear sleigh bells bouncing off the halls as the church choir sings along. Feel my heart melt when you walk through those doors for Christmas. You're all I want. All I wanted was you.
Welcome back, WeMasterTrade family. So, picture this, you are a skilled trader. You spend hours mastering charts, studying the market, sharpening your edge. But one thing always holds you back, capital risk. So, what if someone believes in your talent enough to back your trades? And what if someone, give you access to thousands of dollars in funding without risking your own money? So, welcome to WeMasterTrade, where your skill meets your capital.
Yes, and WeMasterTrade isn't just another platform in the crowded space with something different, something bold, what we call an angel funding project. Why angel? Because we don't just fund traders, we invest in them, we guide them, and we help them scale the potential into real, consistent profits. Think of us as your team, the silent force behind your charts, the trades in the book.
And the best part, we take the risk so you can focus on what you do best, trading smart. No pressures of losing your own capital, no more emotional trading due to fear of personal loss. With WeMasterTrade, you are finally free to trade with clarity, control, and confidence. And guess what? You still get to keep up to 90% of the profits. Sound like a dream? It's not. It's our motto.
So our mission is simple but powerful: to empower serious scalp traders with capital, tools, and a community so they can thrive in the global market. But we are building more than just a platform. We're building a platform that recognizes you, the trader, and the assets worth investing in.
And it doesn't matter where you come from, your background, your budget, or your story. If you got discipline, strategy, and the mindset to grow, we got the capital to fuel your journey.
So, if you're ready to start trading small and starting thinking big, welcome to WeMasterTrade, where your talent meets our trust. Let's make trading your full-time future.
But before we dive into how everything works, let's take a quick moment to introduce ourselves, because behind every platform, there's a team of real people, real traders, and real passion.
Hi everyone, my name is Scarlett, a full-time trader, former finance analyst, and now a passionate mentor here at WeMasterTrade. I've been in the market for over 2 years, and I've seen all the wins, the losses, and the late night processing. What I love most? Well, helping traders finally break through that ceiling, the one where capital always seems like the enemy. At WeMasterTrade, I get to flip that narrative. We become the win as your pet.
And I'm Rob, swing trader, risk management kit, and honestly, your go-to high human and the market gets rough. I started just like many of you, demo accounts, blowing small accounts, learning the hard way, but eventually I found consistency. And the truth is, it came down to two things: discipline and backing. Now I get to work with WeMasterTrade and support traders like you to reach that level faster without going broke in the process.
And I'm Aiden, your MC, but more than that, I am your connector, here to guide you through the WeMasterTrade ecosystem. And I may not be the one who on charts all day, but I've spent years building brands, platforms, and communities that empower creators and traders to shine. So trust me when I say that you're about to discover with WeMasterTrade could change your way you trade forever. So now that you've met our team, but before we explore how WeMasterTrade empowers traders like you to reach new highs, our process is designed to be straightforward, supportive, and most importantly, align with your success.
And at WeMasterTrade, we understand that every trader journey is unique. That's why we offer two distinct funding pathways to cater to different experience levels and goals. First, we have the challenge package. This is ideal for those who prefer a structured evaluation to showcase their trading skills. And we also have instant funding package, which is perfect for experienced traders seeking immediate access to capital without undergoing a journey phase. Let's dive deeper into each option.
Let's start with the challenge package. This pathway is tailored for traders who want to demonstrate their proficiency through a structured evaluation. Here's how it works. Phase 1, Trading Skill Assessment. The aim is to achieve an 8% profit target while adhering to our risk management guidelines, and the purpose is to evaluate your ability to generate profits and manage risk effectively in a simulated environment. And Phase 2, Stability Assessment. Strive for a 6% profit target, focusing on consistency and disciplined trading practices. Successful completion of this phase showcases your readiness to manage a funding account responsibly. Even passing both phases, you will be granted access to our capital, allowing you to trade with real funds and share in the profits.
And for those seeking a more direct route, our instant funding package offers immediate access to trading capital. This option is designed for traders who have a proven track record and wish to bypass the evaluation process. The key features include immediate access to capital, start trading with amounts ranging from $10,000 to $200,000, About the profit sharing, enjoy a profit split of up to 90%, rewarding your trading expertise and the flexibility. No restriction on trading styles, allowing you to utilize strategies such as scalping, day trading, or using expert advisor, which is EA. This package empowered you to leverage your skills and experience without delay.
But regardless of the path he chose, our commitment remains the same, to provide you with the resources, support and opportunities needed to excel in the trading world. But how do we ensure a seamless and efficient trading experience? So let's talk about our cutting-edge trading platform.
Well, at WeMasterTrade, we prioritize providing you with top-tier trading platforms that cater to both novice and experienced traders. Our offerings include all-in-one platform, a user-friendly, web-based system that allows you to manage accounts, place trades, and monitor performance seamlessly, integrated educational resources to enhance your trading knowledge as you go. The second thing is advanced trading platform, Platform 5, designed for active and professional traders seeking advanced tools and customization. Features include multiple trading tools, indicators, and enhanced control and orders. Available for download on Windows, Mac OS, Android, and iOS devices, ensuring you can trade on the go. These platforms are engineered to provide a robust and flexible trading environment, enabling you to execute your strategy effectively.
And beyond technology, we believe in the power of community and continuous learning. As part of the WeMasterTrade family, you have access to educational courses. This is the comprehensive programs covering various aspects of trading, suitable for all experience levels. We also have mentorship programs, which is guidance from seasoned traders to help refine your strategies and decision-making processes. And we also have community engagement. This is opportunities to connect with fellow traders, share insights, and grow together. Our goal is to foster an environment where you can thrive and achieve consistent success.
Transparency and trust are the cornerstone of our operations, and WeMasterTrade is a fully registered company holding an official MSB license in the United States and complying with the international security regulations. So our credibility is further enforced by multiple industry awards, recognizing us as a leader in the prop trading scene. But don't just take our word for it, because let's hear from our traders who have experienced success with WeMasterTrade.
Absolutely, our trader success stories speak volume about the opportunities and support we provide. For instance, many have praised our instant funding process, highlighting how it has enabled them to trade larger positions without risking personal capital. Others have emphasized our transparent profit sharing models and the flexibility to employ various trading strategies without restriction. These testimonials underscore our dedication to empowering traders and fostering a community of trust and mutual growth.
So, in summary, WeMasterTrade offers a comprehensive ecosystem that's designed to support traders at every stage of their journey. But whether you're looking to prove your skills or through our challenge package or seeking immediate capital via our student funding project, so we provide the tools, the platform, and community to help you succeed. So, ready to validate your trading career? Join with WeMasterTrade, where your talent meets our trust, and let's embark on this journey together and achieve new highs in the trading world. So now that we have covered the WeMasterTrade operations, so let's dive into the standard features that make our platform the go-to choice for traders worldwide. So Scarlett, why don't you kick up things up?
Absolutely, one of the most compelling aspects of WeMasterTrade is our instant funding option. Unlike traditional platforms that require lengthy evaluations, we provide traders with immediate access to capital. This means you can start trading with a virtual funds ranging from $10,000 to $200,000 with buying power up to $1 million USD right away.
And let's not forget about our profit sharing model. At WeMasterTrade, we believe in rewarding our traders generously. You can earn a profit sharing starting at 50% for your first payout, increasing to 75% on your second and reaching up to 90% from your third payout onwards. These structures ensure that as you continue to succeed, you reap more of the reward.
So that's impressive. So can you tell us about the diverse range of tradable instruments available on our platform?
Well, certainly, WeMasterTrade offers a wide array of financial instruments to cater to various trading preferences. Our traders have access to forex pairs, about major, minor, and exotic currency pairs. About energies, we have commodities like crude oil and natural gas. About the indices, we have major global indices representing different markets, and we also have stock symbol shares from leading companies across various sectors. This diversity allows traders to explore multiple markets and diversify their trading strategies.
Speaking of strategies, our platform is designed to accommodate various trading styles. Whether you are into scalping, day trading, or using expert advisors, which is EA, we got your cover. Plus, we allow new tradings and offer unlimited contract sizes, providing the flexibility you need to implement your preferred strategy effectively.
Flexibility is key in trading. So Scarlett, can you elaborate on the educational resources we offer to support our traders?
Well, of course, as we mentioned, we understand that continuous learning is vital for trading success. That's why we established WeMasterTrade Academy, offering comprehensive educational resources, including trading courses, which is covering fundamental and technical analysis, risk management, and trading psychology. Next up, we also have platform tutorial, which helping traders master the use of our advanced trading platforms. And we also have webinar and seminar featuring industry experts sharing insights and strategies. Our academy is designed to empower traders with the knowledge and skill needed to excel in the market.
And let's not overlook our daily payouts features. We master trade ensuring that traders can request profit or withdrawal daily with an average payout time of just 48 hours. This means you won't have to wait long to enjoy the fruit of your trading efforts.
So quick and reliable pay is indeed a game changer. So Scarlett, could you shed some lines on the scale plan that we're currently offering?
Certainly, our scale plan is designed to reward consistent performance as you demonstrate steady profitability and adherence to risk management rules. We offer the opportunity to increase your account size. This means access to larger capital allocations, allowing you to scale your trading operations and potential profits over time.
And to support your trading journey, we provide user-friendly trading platform equipped with real-time data and advanced tools. This ensures you have a seamless and efficient trading experience, whether you are a novice or an experienced trader.
So to sum it all up, WeMasterTrade combines instant funding, general profit sharing, a diverse range of tradable instruments, flexible trading conditions, comprehensive educational resources, prompt payouts, and opportunities for growth. So it's a platform designed by traders for traders, aiming to provide everything you need to succeed in the financial market.
Exactly. Whether you're just starting out or looking to take your trading to the next level, WeMasterTrade is here to support your journey every step of the way.
So traders, next up, this is, I believe, where magic is going to happen, because we'll talk about packages and how you can jumpstart your trading journey with WeMasterTrade. But let's be real, success in trading isn't just about the package that you choose. It's also about understanding and sticking to the rules. So the conditions that we have set here at WeMasterTrade are designed to not only keep you safe, but also help you grow and take your strategy to the next level. Now, whether just getting started or you've years of experience, these conditions will act as your roadmap. So let's dive into the rules that define our trading environment, because if you understand the rules, you can master the game. And first in the words, and arguably one of the most important, is the daily loss limit. So that you've been through it all, the high, the lows, can you kick things up by explaining to everybody how this daily limit works and why it's so crucial for managing risk?
Absolutely, Aiden. The die loss limit is one of the most essential protections any trader can employ. It serves as a daily circuit breaker to prevent you from suffering significant losses on a challenging day. The concept is straightforward. There is a limit to how much you can lose in a single day of trading, and is determined by the greater true value, your account balance, or your equity at the beginning of the day. Let me break that down with an example so everyone understands it clearly. Let's say you got a balance of $105,000, but due to some overtrades, your equity, which including floating profit and loss, is $107,000 at the start of the day. If you're working with a 4% die loss limit, that means you can lose up to $4,000. And if your equity falls below $103,000, you are done trading for the day. On the flip side, if your balance is $100,000 and your equity is $99,000, the same 4% loss limit would mean your account would be liquidated if your equity dips below $96,000. The point is the die loss limit is there to make sure a bad day doesn't wipe you out completely. It's about protecting your account and giving you the chance to regroup and come back stronger the next day.
So I question, so if you hit this rule, are you able to continue trading the next day?
Great question. I didn't know if you breach the daily loss limit, your account is automatically liquidated, or your positions will be closed and you won't be able to trade again, or unless you buy a new trading package. Here's the thing, this liquidation is automatic and immediate. It's designed that way to prevent further losses, but here a word of caution. Market fluctuations can sometimes cause you to lose a bit more than the limit, depending how fast the market is moving.
So it's a hot up, definitely something traders should keep an eye on to avoid. And now that we understand what the daily loss limit is and what happens when it hits, so the next question is how to avoid hitting a limit in the first place. So Ralph, you've been in the trading trenches for years, so can you share some practical strategies that traders can use to stay within their daily loss limit? We're all ears.
You got it, Aiden. Staying within the daily loss limit is all about being disciplined and following a solid risk management plan. Here are a few key strategies that have worked. One for me and countless other traders. First, and I can't stress this enough, always use a stop loss. I know it sounds simple, but absolutely critical. The stop loss ensures that if the market moves against you, you're out of the trade before things get out of hand. Think of it as your safety net.
So let's say saying I've got shares on a mountain road, right? It's set to stop before you go off the cliff.
Exactly, Adam, is that extra layer of protection. Now the second strategy is position sizing. This is where a lot of traders slip up. You should never risk too much on a single trade. A good rule of thumb is to risk no more than 1 to 2% of your account balance per trade. This way, even if the trade doesn't go your way, you still fall from hitting your daily loss limit, and you can keep trading without any major setbacks.
So it's like building your defense, you don't put everything in one play, right? You spread out the risk, that actually makes sense. But what about the moments when traders feel tempted to chase after the losses, trying to get it all back in one trade?
Oh, that's a big one. Chasing losses is one of the biggest mistakes traders make, especially new ones. This brings me to my third strategy. Don't chase losses. If you're having a tough day, take a step back. The market will always be there tomorrow. If you start chasing losses, trying to recover too quickly, it's easy to make emotional decisions that lead to even bigger losses. And before you know it, you hit that daily loss limit and you're out for the day.
So true, it's like trying to sprint when you're red and winded, you're more likely to make a mistake. Now, Scarlett, these strategies sound smart on, but how do traders stay mentally strong when things aren't going their way? And what keeps them from falling into that emotional traps of chasing losses?
It's all about a mindset. Trading is just as much a mental game as it is a number game. You got to stay calm and focused. One trick is to always have a trading plan before you even place a trade. That way, when things get tough, you stick to the plan and avoid making impulsive moves. And if you find yourself getting emotional, just stop, take a break, and step away from the screen and reset your mindset.
So thank you, Scott, for these incredible tips on managing daily loss. Now let's shift our focus to another critical element of risk management, the maximum loss limit. So this limit is like your long-term safety net, ensuring that you don't deplete your account over time. So unlike the daily loss limit, which resets at the end of each day, the maximum loss limit is cumulative. So when you reach it, your account will be locked and your trades will be closed. So to dive deeper into this, let's discuss how the maximum loss limit works, how it's calculated, and why it's essential for every trader at every level. So whether you're a new trader looking to minimize risk or an experienced trader scaling your strategies, this limit ensures that you don't go beyond a point of no return. So Scott, I know you've got some great insights into the mechanics of the maximum loss limit. So could you work us through how this rule works and what traders need to keep in mind as they plan their trading strategies?
Of course, Aiden, the maximum loss limit is a vital rule that often overlooked but extremely important. Essentially, it's there to prevent traders from experiencing catastrophic losses by capping how much you can lose across the life of your trading account. So let's break it down. The maximum loss limit ensures that account equity never falls below 94% of its initial balance. So if you start with a balance of $50,000, your account will be closed when your equity falls to $47,000. That's a total allowable loss of $3,000. However, it's not all bad news. If you start making profits, the limit adapts, giving you more breathing room as your equity grows. For example, if your account balance increased to $52,000, you now make $2,000 in profit. Your new maximum loss limit would then allow you to lose up to $5,000 as you're essentially locking in those gains. The maximum loss limit acts as a long-term safeguard. It is designed not only to protect your account but also to encourage disciplined trading by setting boundaries. The goal is to ensure you don't dig yourself into a hole that's too deep to recover from. Here are a few specific examples. Let's talk about a case one. Let's say your account balance starts at $50,000, but your equity drops to $49,000 due to some market losses. You're allowed to lose another $2,000 before your account hits that critical $47,000 threshold and is automatically closed. With the case number two, now if you're doing well and your equity rises to $51,000, you got some extra cushions. At this point, you're allowed to lose up to $4,000 before your account hits that same $47,000 limit. So, to figure out where you stand, the maximum loss limit is calculated by adding the sum of your closed position and factoring in any open position that are still running. Your trading dashboard will show two key metrics: the max permitted loss, which is how much you are allowed to lose overall, and the remaining loss, which is the loss left before your account is closed. Now, what happens if you hit that limit? Well, unfortunately, if your equity hits that maximum loss limit, the system will automatically close your account for the day, or your open position will be liquidated, whether you are profitable or not, and you'll be unable to trade for the rest of the day. To resume your trading, you would need to purchase a new trading package.
So I think this Scott, that's definitely helped clarify the nuts and bolts of the maximum loss limit. So it's a good safety buffer, isn't it? It's there to keep you from spiraling out of control, especially when markets get volatile. Now, I imagine this rule impacts different traders in different ways. So whether you are a cautious trader looking to keep their risk low or a more aggressive trader trying to maximize profit, this limit is one of those things you can't afford to ignore. So next up, we are going to bring in Scholar, our risk management expert. So what do you think are the most common mistakes traders make when it comes to managing the maximum loss limit? And more importantly, what traders need to implement to ensure that they never got too close to it?
Great question, Agent. You are absolutely right. No matter what type of trader you are, ignoring the maximum loss limit can be costly. In fact, it's one of those things that can stick up on traders who aren't paying attention to the long-term picture. And I say the most common mistake is underestimating how quickly accumulated losses can add up over multiple trades. Here are some key strategies I recommend to stay well within your maximum loss limit. So this is your first line of defense. Setting a stop loss means you're deciding in advance how much you're willing to lose on a particular trade. The system will automatically close your trade if it hits that number, which protects you from letting a losing trade get out of hand. For example, if you're only willing to lose $500 on a particular trade, you set that as your stop loss and you won't have to worry about it spiraling.
So I love it to put in a safety belt on each trade once you've looked in at stop loss, it's under your hands.
Exactly, and then it's all about discipline. So we move to the next strategy, manage your position sizing. This is a big one. Often traders, especially new ones, get carried away by putting too much capital into a single trade. But when you risk too much, you also risk losing a larger percentage of your account if the trade goes south. A good rule of thumb is to risk no more than 1 to 2% of your total account balance on any single trade. For example, if your account balance is $50,000, you should only risk $500 to $1,000 per trade. This keeps your potential losses manageable and well within your limits.
So that makes total sense. You're not putting all your eggs in one basket, and it gives you more room to breathe, right?
Exactly, it's all about spreading the risk so you don't take too big on a hit on any one trade. Next up we have monitor your account's equity regularly. This may sound basic, but it's incredibly important to keep an eye on your account's equity throughout the day. It's easy to get caught up in the market highs and lows, but you should always be aware of how close you are to your maximum loss limit. Your dashboard makes it easy to track your remaining loss, so use it. If you see that you're getting close to the limit, it's time to take a step back and re-evaluate your strategy.
So it's almost like watching a few games. You don't want to be driving on foam without knowing it.
Exactly, and no one wants to get stuck on the road. Having a well thought out trading plan is one of the most powerful tools in trader arsenal. This plan should outline not only your profit goals but also your risk management rules. For example, if you have a few losing trades in a row, does your plan tell you to take a break, reassess, or change your strategies? The idea is to have a preset series of rules so you don't make impulsive decisions in the heat of the moment.
So it's like having a roadmap where you know exactly where you're going, and you have the contingency plans for when things don't go as expected.
Exactly, Aiden. The market can be unpredictable, but a solid plan keeps you grounded. Even the best laid plan needs to be reviewed and tweaked from time to time. If you find that you are approaching your maximum loss limit too often, it may be a sign that your risk management strategy needs adjusting. Maybe you need to tighten your stop losses or reduce your trade sizes. The key is to stay flexible and adapt to changing market conditions while always keeping your risk in check.
So that's great advice, Rob. It's all about constant improvement. You can't just set it and forget it. You've got to be ready to adjust based on your results and the market.
Absolutely, trading is dynamic and your strategies should be too.
So thank you all for the fantastic breakdown of the maximum loss limit. So this takes us perfectly into our next key topic, the profit consistency rule. So this rule is critical for ensuring long-term sustainable success in trading, as it helps managers maintain consistency in your profit. Now, to give us a clear picture of how the profit consistency rule works and why it's important, let's turn to Scarlett. So Scarlett, can you break down rules for us, how it is calculated and why it's important for traders to focus on that consistency rather than just aiming for big wins?
Of course, Aiden, the profit consistency rule is a powerful metric that helps you understand how stable your profits are over time. It's not just about making big gains on 1 or 2 good days, it's about being consistent day in and day out. So Here is how the profit consistency rule is calculated. You take your highest single day profit and divide it by the total of all your profits and losses over a given period, usually a month or a quarter. You then express that result as a percentage. Let's go through an example. Say your best day brought in $200 in profit, but over the month, your total profits and losses add up to $410. In that case, your profit consistency ratio would be around 48.7%. This ratio shows how much your performance counts from one standout day. Ideally, you want this percentage to be lower, under 20%, because that means your profits are more evenly spread out across all your trading days. Now, why is this important? A low profit consistency ratio indicates that you're not just relying on a couple of big wins to stay profitable. Instead, you're showing that your strategy works consistently over time, even on those days when the market isn't giving you a big win. This kind of consistency is the hallmark of a successful long-term trader.
So that's a great explanation, Scarlett. So just to clarify, a lower ratio means you're more likely to make steady gains rather than being overly dependent on a few good days, right?
Exactly, and then when you're too reliant on just a few big wins, it often means that your strategy is risky or inconsistent. You could go through long stretches when you're not making much money or even losing it. But if your profit consistency ratio is low, you show that your performance is smoother and your trading is more predictable and stable over time.
So that's incredibly insightful. So it seems like a critical metric for any traders who's serious about long-term success, right?
Exactly, consistency is the key to sustainable profitability. Big wins are great, but if they are followed by big losses or long periods of break-even trading, it's hard to maintain momentum. With the profit consistency rule, traders can keep an eye on how reliable their strategy is over time.
So now that we've got a solid understanding of what the profit consistency rule is, so let's dig into practical strategies to help traders maintain a low ratio, ideally under 20%. So Ralph, I know that you got some great tips for it. So can you walk us through some techniques that traders can use to stay consistent and ensure their ratio stays in check?
Absolutely, Aiden. The profit consistency ratio is a powerful indicator, but it takes careful management to keep it low. So let's talk about some practical ways traders can improve their consistency and avoid becoming too dependent on those rare big wins. One of the most effective strategies to keep your profit consistency ratio low is to diversify your trades. This means spreading your investment across different markets, asset classes, or even trading strategies. If you only trade one market, say forex or stock, you risk being too reliant on the market's performance. By diversifying, you reduce the impact of any single loss and create more stability in your overall performance.
So that makes a lot of sense. So if I'm only trading in, let's say, the US stock market, I bet we could really hit my consistency hard. But by adding trades in, for example, commodities or forex, I could balance some of that risk, right?
Exactly, Adam. It's all about balance. When one market isn't performing well, another market might be doing better. This way, your overall performance stays smoother and you are not relying on just one or two trades to pull you through. Next up is position sizing. One of the biggest mistakes traders make is over-leveraging. Taking on positions are too large relative to their account balance. For example, if you have a $10,000 account, putting $5,000 into a single trade is risky because if that trade goes south, you could lose a significant portion of your capital. Instead, aim to keep your position sizes small and manageable. Say no more than 1 to 2% of your account balance per trade. This reduces your risk and helps ensure that losses don't overwhelm your profit.
Right, so not just about picking the right trades, it's also making sure you're not putting too much of your capital at risk on any single trade. Smaller, more controlled trades lead to steadier returns over time, right?
Exactly. By managing position sizing, you prevent any single trade from having too much impact on your overall performance. It's all about control and discipline. Another crucial element is having a well-defined trading plan. Without a plan, it's easy to get caught up in the emotion of trading, whether that's the excitement of a potential win or the panic of a sudden loss. A solid plan outlines exactly when you will enter a trade, when you will exit, and how much risk you are willing to take. Having these rules in place keep you grounded and have ensured that your trading decisions are consistent, which in turn helps keep your profit consistency ratio in check.
So, I believe that's a really good point. A lot of traders, especially new ones, probably jump into trades without a solid plan and end up making emotional decisions, right?
Absolutely, Aidan. It's so easy to get emotional in the heat of the moment, but if you have a plan, it's much easier to stay disciplined and avoid impulsive trade that could hurt your performance. This brings us to stop loss orders. A stop loss is an automatic exit that you set up to close a trade if it moves against you. This helps to cap your losses on any single trade and protect your account balance. By using stop loss orders, you can avoid those catastrophic losses that can throw off your profit consistency.
So, I like the ideas of using stop loss orders. It sounds like a way to take the emotions out of the decision-making process.
Exactly, it's like setting up a safety net. Once your stop loss is in place, you don't have to worry about watching the trade 24/7. If things go south, the stop loss take you out of the trade automatically, helping you stick to your plan and avoid large unexpected losses. Another important strategy is to regularly review your performance. Just because you set up a solid plan and the strategies doesn't mean you should put everything on autopilot. It's crucial to track your trades, see what's working, and make adjustments as needed. You might find that certain markets or strategies are delivering more consistent results than others. By keeping a close eye on your performance, you can tweak your approach and improve your consistency over time.
So it's like performing maintenance on your trading strategies, always looking for ways to optimize and improve.
Exactly, just like a car needs regular tune-ups, your trading plan does too. Continuous improvement is key to keeping your profit steady. Finally, and this is a big one, avoid emotional trading. Whether it's fear after a loss or overconfidence after a win, emotion can lead to poor decision making. If you stick to your strategies and avoid chasing losses or getting overly excited after a good day, you will see much more consistent results.
So that's such an important point, staying calm and disciplined even when the market is going crazy. But it's easier said than done though, right?
That's right, it's definitely take practice, but staying level-headed is crucial for long-term success. If you can control your emotions and stick to your plan, you will be far more likely to maintain consistent profit.
Okay, thank you, Scarlett and Rob. It's such a fantastic breakdown of the maximum of the profit consistency rules. So next up, we are going to enter a short break, and after that, we're going to continue exploring our risk consistency rules and the promotion land that we're currently running.
copy trade. We copy trade. We copy trade. copy trade. We copy trade.
Welcome back with WeMasterTrade Trader. So next up we are going to dive into another crucial aspect of effective trading, the risk consistency rule. So this rule is key to maintaining both stability and long-term profitability in your trading account. So Skylar, you've got a great way of explaining it. So can you walk us through what the risk consistency rule is and why it's so important for traders to follow?
Sure thing, Ivan. The risk consistency rule is all about ensuring that you manage your risk in a disciplined, consistent manner. It limits the risk per trade to no more than 2% of your initial account balance. This is really important because it prevents large swing in your equity and helps mitigate the risk of significant losses due to sudden market movements or unexpected events. So let's break it down a little more. About a maximum risk per trade idea, which means you shouldn't risk more than 2% of your initial balance on any single trade idea. This includes any floating losses, so you need to factor in all potential exposure. About a trade idea definition, multiple trades on the same assets in the same direction are considered a single trade idea. On the other hand, trades on different assets or in opposite directions are treated as separate ideas. For example, if you open several positions on gold buy, they will count as one trade idea, and the combined risk must remain under 2%. But if you have a gold buy and a GBP sell, they treat it as two separate ideas, which each with their own 2% risk limit. Following these rules smooth out your equity curves, encourages disciplined trading, and most importantly, reduce the chances of massive losses.
So that's a really helpful overview. So now let me throw this back to the audience for a second. So traders, have any of you ever found it tricky to stick to the risk consumption rule, and how does it feel to have those limits in place? Does it ever get in the way of your trading strategies?
Absolutely, Aidan. The main points to remember about the risk consistency rule are risk per trade idea. Stick to risk in no more than 2% of your initial account balance on any single trade idea. This keeps potential losses manageable and ensures you don't risk too much on any one trade. About a single trade idea, if you opening multiple trades on the same asset and in the same direction, they count as one trade idea, so your combined risk must stay within that 2%. Separate trade ideas, which means trades on different assets or in different directions are considered separate ideas. Each of these can have its own 2% risk, but be mindful to keep track of them. So why does this matter? It stabilizes your equity curves by preventing huge swing in your account balance, and it promotes discipline in encouraging traders to think more carefully about their risk. And most importantly, it reduces the risk of major losses that can really hurt your overall performance. So in short, adhering to this rule helps keep your trading account safer and supports long-term success.
So great, Scarlett. So I know that you might be wondering how to make sure you actually stick to this rule. So let's switch gears and go into some practical strategies for making it easier to follow. So Rap, could you share a few tips on how traders can stay disciplined and avoid breaking the business rule?
Of course, Aidan. Sticking to the risk consistency rule takes some planning and discipline, but it's totally doable with the right strategy in place. Here are a few key tips. First and foremost, clearly set your maximum risk per trade idea to stay within the 2% limit. You can use risk management tools or calculators to help with this. Most platforms have built-in tools that allow you to automate risk limits.
So that's a really good point, having the automations in place. Takes a lot of the pressures off, right? No need to constantly double check that your platform does the heavy lifting.
Exactly, it makes it so much easier to stick to your risk limit when the platform is handling the number of you. It's also important to keep track of the total risk across multiple trades on the same assets. For instance, if you open several positions on go buy, make sure the combined risk for on those trades doesn't exceed 2%. This is where traders sometimes slip up. They open multiple positions without realizing that, combined, they are risking more than they intended.
So even though the trades are technically separate, if they're on the same asset, we've got to look at them as one entity, right?
Exactly, Adam. Treat them as one idea because they are all exposed to the same market movement. Speaking of different trades, it's equally important to treat trades on different assets or in opposite direction as separate ideas. This way you can manage each trade risk individually without exceeding the 2% rule on any single trade.
So you could be running a go buy and a JPY sales at the same time without violating the rule, as long as you manage risk for each one separately.
Exactly, just make sure you're keeping an eye on the risk for each idea individually. I would also recommend using risk management features that many trading platforms offer, like automatic position sizing or stop loss orders. These tools can help control your exposures and prevent you from overextending your risk.
So I imagine these tools really help prevent those moments when you attempt to take on too much risk in a heat of the moment, right?
Absolutely, it takes the emotion out of the equation and helps you stay disciplined. Lastly, make it a habit to regularly review your trading activity. This is sometimes a lot of traders neglect. Reviewing your trades helps ensure that your risk per trade idea remains within the set limits. And if you notice any patterns or areas where you are taking on too much risk, you can adjust your strategy to stay confident.
It sounds very regular check-ins are crucial to spotting potential issues before they become big problems.
Exactly, Adam. It's all about staying proactive.
So next up, we're going to enter the promotion plans that we're currently running. So our versions of WeMasterTrade is supports the thriving communities of elite professional traders, positioning WeMasterTrade.com as a go-to platform for anyone serious about advancing their career. So WeMasterTrade, we understand that each trader's needs are different, and we're here to support you with the tools, insights, and personal packages that cater to your specific trading goals. And if you are ready to take your trading to the next level, you definitely want to stick around to hear about the exciting offers that we've got lined up. So while today we have an exciting update that will help you increase your earnings without changing your trading style. It's all about boosting your profit split by simply choosing the right funding package. And Rob will break it down for you.
Well, this new update is something that every trader should know about. When you put in the effort to grow your account, wouldn't it be amazing to actually keep more of what you earn? Well, now with this new profit sharing tools, that's exactly what's happening.
Absolutely, Ralph. I know that one of the most common frustration in trading is feeling like your hard work isn't rewarded enough. But now with this bonus profit sharing feature, you can actually increase the percentage of your profits you keep. It's a total game changer.
Alright, so let's get straight into the details so you can boost your profit split and earn more. So when you invest in an upfront instant funding package with packages over $175, you get one extra bonus in profit sharing, and for packages over 340, you get 3% plus profit sharing plus, and over 650, you got 5% bonus profit sharing. So now can you break this down for a real example?
Of course, let's take a look at the $500 funding package. Normally with instant funding, you start with a 50% profit share, meaning that for every $1,000 in profit you make, you would get $500. But with this new promotion, when you choose the package over $500, your profit share jumps from 50% to 55%. That means instead of taking home $500 from that 1,000 profit, you now keep $550. And while that might seem like a small change at first, think about how much that adds up over time, especially for consistent traders. So in short, the bigger the package, the bigger your profit share boost.
Exactly, Rap. And traders, here's why this is such a smart move. Let's say you're someone who trades consistently and make $5,000 in profits over time with a standard 50% profit share. You walk away with $2,500, but with the 55% put, you now keep $2,750. That's an extra $250 in your pocket for simply choosing the right package. And the best part, there's no extra effort required. You don't have to change your strategy or take unnecessary risks. All you need to do is select a higher funding package and you'll instantly start earning more from the same trades.
So now that you've got to be wondering why is it such a big deal for traders, so let's hear from Rap on this.
Great question, Zayden. As traders, our goal is to always to maximize return while minimizing risk. The best way to grow your account is to keep reinvesting your profits, but that's only possible if you are getting a bigger share of what you earn. With a higher profit share, you can scale up faster, compound your earnings, and have more capital to work with your next trades. Think about it, if you're keeping a larger percentage of your profits, you have more flexibility to diversify your trades, try new strategies, and even withdraw more funds. This is especially important for those who want to trade for the long term. Over time, this small percentage increases and up to thousands of extra dollars. So if you're someone who takes trading seriously, this is a huge opportunity to level up your earnings.
That's such an important point, Raf. And from a psychological perspective, knowing that you're earning more per trade can actually help you stay disciplined and focused instead of overtrading or taking unnecessary risks to create bigger profits. You can trade smarter because you're already keeping a bigger share of what you make. Plus, this isn't just about individual benefits. The more traders take advantage of this offer, the stronger our trading community becomes. More capital means better trading conditions, more opportunities, and a stronger ecosystem for everyone.
So, alright traders, you've heard it from the expert. This profit sharing is offering you chance to increase your earnings without changing your trading styles. And all you need to do is just choose the right funding package and you instantly boost your profit split. So visit WeMasterTrade.com now and grab your instant funding package.
Guys, this is an opportunity you don't want to miss. The market is all about making smart decisions, and this is one of the easy ways to maximize your returns. If you are serious about your trading journey, this is a no-brainer. Don't wait too long because opportunities like this don't come every day.
So, alright traders, so let's talk about one of the hottest offers available right now, the WeMasterTrade BOGO event. So this isn't just a discount or a little perk. It's a game changer for traders looking to scale their accounts with zero extra costs. So Scarlett, care to break it down for us?
Absolutely, the BOGO event, or buy one get one, is one of our most generous promotions to date. Here's how it works. If you're buying a $175 account or higher, you will get a free $10,000 instant account. And if you buy a $340 account or higher, you will get a free $25,000 instant account. And if you buy a $650 account or higher, you will get a free $50,000 instant account. So essentially, when you purchase an eligible instant funding package, you double your trading assets without spending an extra cent.
And let's be real, that second account can do so much for you. Maybe you want to try different strategies. Maybe you want to split your trades between conservative and aggressive setups. Or maybe you just want a safety net in case one of your accounts is drawn out. Either way, you now have more capital, more flexibility, and more opportunity.
So I love that, and this isn't just a BOGO that make you jump through hoops, right? The BOGO account is going to be issued after a qualifying purchase, isn't that right, Scarlett?
That's right, when your purchase is confirmed, our system automatically issues your bonus account. No hidden steps, no waiting periods. It's quick, seamless, and incredibly trader friendly.
And here's the cool part, WeMasterTrade allows you to combine BOGO accounts up to $200,000 in total funded capital. That means if you're a serious trader looking to scale, you can start this account to trade even larger.
So that's huge, but let's talk terms. So there are three rules to keep things fair and balanced, right?
Right, so here's what you need to know. Each BOGO account allows one payout. After you claim your first profit, that account is complete. Only one active BOGO promotion per trader at a time. Once you complete your BOGO phase, you are eligible for a new one. BOGO account must adhere to the same trading rules as standard instant funding account. That means daily drawdowns, maximum loss limits, and profit targets still apply.
So how do you make the most of it? Well, you could use your main account for your dry and true strategy, and the BOGO account is to experiment with something new. Try gold scalping, use breakout trading, or running an EA on one and manual trading on the other. You cut options, and that's what this promotion is all about.
You can also use it to compare your emotional trading on one account with a more rules-based approach on the other. This creates a controlled environment for skill development. It's ideal for traders who are looking to become more consistent and test risk models under real-time funding conditions.
So to recap, with the BOGO event, you get an additional funding account for free with the potential to scale all the way to £200,000. You diversify, test, trade smarter, and profit more. Oh, why WeMasterTrade cover the risk.
And if you're just starting out, it's the perfect way to get two chances to succeed instead of one. You get to refine your discipline, test consistency, and understand the platform better with twice the experience and zero additional cost.
Exactly, we designed BOGO promo with growth in mind, not just profits but development. It's a tool to building skills, scaling accounts, and increasing opportunities for every kind of trader.
So, and remember, the Virgo event is only available for a limited time, so don't miss a window to multiply your opportunities, whether you're trading full-time or still learning rough. This is where the offer that lets you move forward with confidence. So, now let's take a closer look at today's global economic indicators and their potential impact on the market. From the US and New Zealand to Japan, Australia, and the Eurozone, here's your comprehensive macro update.
Sure. Well, starting with the US, the consumer credit figure came in at minus 0.8 billion, significantly missing the 14.9 billion forecast. This negative reading shows that consumers are paying off debt rather than borrowing, a possible signal of tightening credit conditions or declining consumer confidence.
It's also pairs for the USD and sector tied to consumer activity like retail and banking. Economists are calling this a potential early warning sign of slowing economic growth. If quick consumer demand persists, it could even spark talk of future Fed rate cuts.
So, meanwhile, the NFIB Small Business Index dropped 98.9, down from 100.9. So, this implied growing uncertainty among small businesses, often due to inflation worries or regulatory concerns.
This is modestly bearish for the USD sector that rely heavily on small business health, such as domestic real estate and services, might feel the squeeze.
Next, let's turn to New Zealand. The end-year business confidence index rose to 19, up from 16. That's a sign that businesses expect improving conditions, possibly driven by trade momentum or stable inflation.
This is clearly bullish for NZD and could push investor sentiment in New Zealand equities. Economists may view it as a positive signal for GDP and employment growth.
And for Japan's current account came in at 2.32 trillion yen, slightly below forecast, but still higher than the previous month. It reflects a strengthening trade position.
Definitely bullish for the GPY, reinforcing Japan's stable export performance, added to a strong third-year bond auction with a 2.41% yield and a 3.0 bid to cover ratio, and you got signs of healthy investor confidence.
However, the economy watcher sentiment dipped to 45.1 from 45.6, still in pessimistic territory. That's slightly bearish for GBY, but has limited immediate market effect.
While Australia's economic signals are mixed but leaning bearish, the Westpac consumer sentiment dropped 6%, reserving last month's gains. That's a clear red flag for household spending.
The NAB Business Confidence Index also slipped to -3, reflecting continued pessimism among firms. On this point to a possible dovish tail from the RBA, which is pairs for AUD.
And lastly, the Eurozone France trade balance widened to minus 7.9 billion, within both forecasts and previous data. This suggests higher impulse costs for all weak export demand.
So that's periods for the EUR, particularly if it reflects a broader EU trend. Meanwhile, Germany's 10-year bond auction saw a 2.38% yield in a 2.2 bid cover, suggesting neutral to slightly positive investor sentiment.
So what does it all mean globally? We're seeing a divergent economic landscape, with US consumer data and small business sentiment weigh on the USD. New Zealand shows optimism strengthening NZD, Japan trades outlook and bond demand support GPY, and Australia faces sentiment declines in both households and businesses, pressuring AUD. Eurozone trade imbalances could challenge euro moving forward. So the shift offer opportunities for strategic trading cross-border commodities and equities, stating stable and always manage risk like a pro. So as we wrap up this session, let's take a moment to reflect on what we have covered and why it matters to you as a trader in today's fast-moving financial world. So we started with an in-depth look at the burger promotion, one WeMasterTrade Value offers. The ability to double your trading opportunity at no extra cost is more than a perk. It's more powerful stepping stone for diversification, strategic testing, and account scaling. So whether you're unifying your skills or trying something new, the burger gives you 2 chances to succeed instead of 1. So that one alone can be a game changer. And then we all look into you as you heard of global economic data with our economic analysis segment. So we broke down the slowdown U.S. consumer credit and small business confidence, signaling a potential cracks in the economic foundations of the largest economy. And the rise in New Zealand business optimism is fueling bullish momentum for NZD, and Japan growing trade surplus and a strong bond demand, reflecting a steady investor confidence in the yen. And Australia declining consumer and business sentiment, putting pressures on the AUD, and of course the Eurozone concerns surrounding funds, widening trade deficits and muted demand for long-term bonds. So I believe that each data point is more than just a number. It's a signal, a clue, a piece of the puzzle that interpretedly connectively, so it can guide your next mile in the market. So this is a kind of edge WeMasterTrade gives you, access to funding, education, analysis, and opportunity all in one place. So, but what makes WeMasterTrade truly different isn't just the funding or the pros, it's a philosophy. So we believe that every trader, no matter where they're starting from, deserve a shot at success. Whether you're just trading part-time with a goal of side income, or you're preparing for the leap to full-time professional trading, our platform is built to scale with you, not against you. So our tools are designed to be intuitive. Our communities is growing and active. Our support teams is made of people who know trading, not just software. And our mission is quite simple: to help skilled traders succeed without the weight of financial risk slowing them down. So if you've been on the sideline watching and waiting, now is the time to take action. So join a platform that actually partners you, backs your real with real capital, and surrounds you with insight that matter. So explore the latest promotions, unblock your burger account, monitor the global market shifts, and become more informed, more confident, more profitable traders. Remember, success in trading isn't just about entry points and pips, it's about mindset, consistencies, and having the right team in your corner. And if you're ready to trade smart, grow faster, and finally align with your strategy, with capital that believes in you, this is where I believe the place to start. So we are not just funding you trades, we are investing in you. So to stay sharp, stay smart, and until next time, this is where WeMasterTrade, where your strategy meets our support and your potential become profits.
So, and here's a few trading tips for April 8th news events. First, you need to use the news as a catalyst, not the only signal. So the economic calendars give directional bias, but don't blindly enter right after data drops. Wait for the confirmation candles. For example, break off a support or resistance or strong engulfing candle, and combine fundamental and technicals for stronger entries. Next up, we have trades in the right session. For London, which is from 8 a.m. to 12 p.m. GMT, and New York is from 1 p.m. to 5 p.m. GMT session are most liquid. Today, GBP, EUR, and USD pairs will likely be most active during those times, and avoid trading during low liquidity hours unless there's major scheduled news. Next up, you need to watch for fake outs after news. After big release like the French trade balance or consumer credit, markets may spike in one direction then reverse. So let's the first candle after news close, then trade the latest or will breakout. So the tip is if the candle wick hard and close wick, so you need to wait. It may be a trap. Next up we have stay adaptive. Fundamentals change fast. 1 week US number like today's consumer credit doesn't mean a full USD trend reversal. Watch how markets react more than the data itself. If bad news doesn't move up price, the market might be pricing in something bigger ahead. And another tip is use correlation for confirmation. Use relative pairs to confirm setup, like AUD GBP plus AUD or USD, same AUD trend. The pair EUR USD plus GBP USD check USD weakness, and with a goal with USD and GBP, gold up which is equal to weaker USD. Correlation helps filter out bad trades. So next up, we need to set small stop losses and targets. Always have a clear stop loss based on structure, not just pips. Don't place a stop loss too tight near the key zones or new candles. Allow room for volatility. Use ATR, which is an average true range, to size stop loss properly. And next up, we have the plan ahead. Look at what's coming. After today's events, check what's lined up for tomorrow. Example CPI, NFP, or Fed speeches. Avoid holding trades into major events unless you're locked in profit. So that is our trading tips.
And with that, it's time for us to sign up. On behalf of the entire WeMasterTrade team, we want to thank you for spending your time with us, learning, growing, and preparing to take your trading journey to the next level. And whether this is your first exposure to prop trading or you already well along your path, remember you never alone in this industry. Our mission has always been about building more than just a platform. We are building a community, a mindset, and a movement. So stay informed, stay consistent, and stay focused on our goals. And always remember, your success is not defined by any single trade, but by your growth, your discipline, and the choice that you make every day. So thank you for watching, thank you for trusting WeMasterTrade, and thank you for being part of this ever-growing trading family. Until we meet again, trade balls, stay disciplined, and as always, master the markets.